Hello traders, it's Samurai Trader here. Welcome to this recording. This recording is actually being prepared mainly for one of our oil traders based in Canada who's a full-time professional oil trader, and he does very well. He's placing between 60 and 100 trades a day from 6 a.m. till 11:30 a.m. exchange time, and financially he's doing extremely well. So he's now incorporating some of our trade setups within his own trading, and so the purpose of this recording is actually a recap for John. His name is John. So John, I'm recording this and I'll post it in the members area, but so traders, if you hear me talking specifically to John, you know why, but I just thought this would be a good one. So we're working, as I mentioned, closely together. I'm acting as a coach with him, so hopefully you find this interesting. Now please remember, whatever I cover here is applicable to all markets and time frames. Yes, you'll see some differences between, say, the ES and here the CL, and differences between CL, of course, and futures and the NQ. They're all different. However, the same setups and principles apply. So let's now get into this, and John, the rest of this recording, mate, is for you. So you use a 6-range chart. So what I've done is set up a 6 range and marked them up. Now the charts that you provided me are very difficult for me to mark up, so I've just gone back to the date that you've sent me on the 4th of November 4, and just marked some of those charts up and the T1 setups. Now many of our traders that are trading oil are trading either the 144 tick chart during London. As you lead into the New York session, they're jumping up to the 233, and even as an example, I'm recording this the day after the election where we saw 870,000 contracts change hands. The 233 was near impossible to trade, so you need to even jump up to a 377 if you're a fib number person, or even the 610, because it moves that quickly. And so just remember to adjust it. However, John, as I said to you before, mate, is that stick with what's working with you. I know you know the 6 range, you've been doing it a long time, so stay with it. And for all traders, there's no right or wrong as long as it works for you, and I think that's very important. There's no right or wrong as long as it works for you. So whatever time frame, and if you've got additional indicators on there, keep running with them. Now as we get into this session, of course, understanding the risk, whatever we talk about here is for educational purposes. Now John, I saw this book and it made me think of you, Trade Like a Casino. And I suppose traders, this is the thing where John's a very high frequency trader executing 60 to 100 trades a day, and John, you are, and you remind me of the casino because you know your house edge, you know what the edge is, and that's your casino, that's your indicators, moving averages, etc. So I just thought you'd like that. Now looking at your chart here, you'll see why I've gone to my own chart, and I know we're focusing on the T1 signals, and there are certain counter trend ones which I'll mark, which I've marked up, and I'll explain. So we, of course, we had one up here, down here, and remember, the more you have in a trend, overall, the greater the chance you're going to have that the trend is going to end, or at least you're going to have a pullback fairly soon. So just keep that in mind. The more T1s that you have, like the more 34 bounces, you know, once you've had 34 B's in a row, there's a very good chance you're coming to an end of a trend, unless you're in a real strong trend day, which is probably realistically only one every 10 days or so. So what I'm looking at here is the action here from 4 a.m., but I just thought I'd mark some things up here for you. This is exchange time, so I know the PowerPoint was not within the frame because I wanted to get as much as this within. Now you can of course use an anchor chart, which I now recommend all traders refer to their anchor chart, which is 3 times higher, and you'll see geometrically or fractally they work really well together, because when you see and the purple line here is a 200 EMA, my aqua here is an 89. So Usually when we get a 200 bounce on the lower time frame, it's an 89B on the higher time frame. So just keep your stats on those, because, and please write this down, when you have two bounces at the same time, say a 34 bounce on your anchor chart and a 89 bounce on your high time frame, have a look at the accuracy of those. Start keeping your stats straight, as I think you'll find it very, very interesting. So we have it here, of course, is a 200B. That is, we've gone up. Price action on the 6 range has gone up there. We've bounced off, and what I've marked up here, John, is what I call a big picture. On the anchor chart, you'll see that will be, if we were looking at an anchor chart, you'll probably find that's a lot closer together. However, you can see there the resistance. Now the black lines that you see here are the $45 a barrel, 44.70, 44.50, and 44.30, and you can just see that, as we know, the support resistance that you'll get at those round numbers in trading oil. Now, for the sake of this video, John, we're going to focus on the T1 setups, which is what you wanted. So we can see here, remember your T1, the white paint bar does not appear until you have 2 full candles and a tick below the second candle. So 2 full candles here and a tick below the second candle, 2 higher candles and a tick above that candle. So we can see here we're trading with the trend. I like to usually just have one chart up, but if you're going to have, and once again, getting back to what I recommend you do, is have an anchor chart up. If you don't have it on the same screen, if you like to have a bigger view, maybe have it in a screen above or next to you, so you can only be trading in the overall trend direction of your anchor chart. Very, very important. Now you'll see these patterns appear, and this is pointed out by a member a long time ago, that when you have a double top or a double bottom against the 200, it greatly improves the chances of your a successful trade. That is, the 200 EMA acts as support or resistance, and that's one thing I love about teaching traders. I learn something every day, and just like everyone else, I suffer from information overload. I've got to go back and review my notes regularly, because it's easy to become distracted, and you've heard me call it the shiny object syndrome. It's very, very easy. So just be aware of that. So getting back to basics, sticking with the trend, 200 bounce trend trade. You had another one, and that's actually a double top. You could have jumped in there, and I recommend you'll stop being, of course, 2 ticks above your swing high or swing low. Now, John, I know that you're a scalper, and members, what John does, he targets 4 ticks with a 5 tick stop, so he's going with momentum. Now what I'd like you to do is to notice the follow through you have on a lot of these. When you get the T1, notice the T1 signal, follow through, T1, follow through. This one, unless you were down here, you would have been perhaps stopped on this one because it come down. It's if your stop was small. Same with this one, but that followed through, that followed through, this followed through. It may have been okay. Now remember, as a 6 range, each one of these candles is worth $60. It is 6 ticks. So just as a reminder for those that are unfamiliar, or if I didn't say it earlier, this is a 6. These are 6 tick candles. Now this here, John, is something that works really well on CL. It works well on most markets. NQ not quite as well, but CL, ES, an absolute treat. And I call these a T9. All they are is a pullback in the market, and I usually like to see them a little closer. That is, and I like the white paint bar. It just makes it very easy, and I like a qualification rule. So you'll see me mark those up. But when you enter into these, what you want to make sure, of course, is that you've got room. Now here we're right up against the pivot. Now that is the 44.70 area. You can see we had acted as a resistance before we punched through, but the 200 was a fair way up. It's a numbers game. the stats are really on your side. If you take these, you'll just once again go back. They're very easy to count. Here's another one here. Notice here you've got a lower high here with a paint bar. Go and do your trade counts on these. This is a very accurate trade. It works a treat. So we've got a double top here, the T7 with the trend. Let's now talk about no matter what time market or time frame, you'll see these same patterns. Let's now talk about these T3s. T3s work an absolute treat on CL. Now, as always, go back and do your own back testing, traders. Go back and mark them up. It won't take you too long, and trade them in demo before you go live. But as an example, you can see here a T3 as a reminder is where you see price action gapping away from the 8 EMA. When you have that happen and you bounce on a pivot, like here we've bounced right on the 44.30 mark, and you get it on both time frames, that is both your anchor chart and your entry chart have this set up, fantastic. Okay, it's a much higher probability trade. Likewise, if you happen to have divergence, it's, if you like, adds another 5 to 10% of the opportunity of the trade coming off. We come up now. Here we've got a 200 bounce. Yes, we've gone through, but we're close enough. I've marked up here and I went and checked this. It was actually an 89B on the anchor chart. So there's a trade there. You come down, you get support here, you come back up, you bounce off the 200, and this is what I call the T9. All it is, once again, is market comes down. It's the ABC pattern, ABC short. That's all it is, ABC short. In this case, well, actually this isn't truly a actually I shouldn't confuse it because it's not a true ABC pattern, that one, but yeah, I think you get the drift. Here you've got a trade here that failed. You can see you had the white paint bar, but then you had another punch through, but that also was an 89B on the anchor chart. So it's actually just going to have a quick look at that there and see if I can pull up for. Here it is here. Let me just go back to that. Sorry about that. Okay, so if we just go back over here, I've set up an anchor chart for you to see. So you can see we've gone up and we've bounced on the 89, we've bounced on the 200. See how they work together? And usually you'll see if you get an 89 bounce on your entry chart, you're getting a 34 bounce on your anchor chart. Track them, traders. It works really well. So we've got a T3 on both. Now another comment I had down here was this. Now I know, John, you're like me, we're scalpers, and one of the things I'm really looking at working on for myself personally is increasing my targets on my second lot of contracts. If you look at using your 8 EMA, and this is why the 8 EMA is better than my original 0 lag, because the 8 is much more versatile. That is, I want to see a close above the 8 for my entry or under the 8 for an entry. But you can see here you can ride these in and you exit on the close over. Now yes, it is great in theory. That is, when you start to get in these choppy areas, you can give a lot back. But when you start to get these sweet spots like over here, down here on the next trend, you can pick up your whole day's profit target just in one of those moves. So that is, as long as you don't have a close over the 8, you stay in the market. Once you get a close above, you exit. So notice the T9 there, nice trade. You've got another one right here. Now traders, if you don't have the paint bar, which some of you don't have, very simply just look at when you have a, say, a move in a direction and you have a 2 to 5 6 candle pullback, then a trend continuation, or that is where the price closes under the 8. So see that, A, B, C. Now what qualifies it is you want to see yourself close under the 8. There is your entry. Okay, and here we've got another nice T3 which is on both time frames, and I'll just expand this. Okay, now here you didn't get much of a return. Now let me say this is, if you do your statistics, you'll see that on nearly every one of these T3s, T89s, you can easily get a 2-to-1 risk reward. So if you're going for 2-to-1 and you take everyone with confidence, you're going to come out well and truly on top. Keep your statistics on these. And being a counter trend trade, of course, the accuracy of them is not as high as if you're trading with the trend. But of course, when you get a pullback, you can get these really nice pullbacks. What will really improve your divergence trades is, well, this is a divergence trade, or improve your counter trend trades, I should say, is when you have divergence as well. Okay, so we had here, this one here was a T3 on both. Now that was only good for 12 ticks thereabouts. Okay, but I know, John, as you're scalping, well and truly. But the thing you've got to watch, John, is using the T1 for your scalping is this: you're already, like here, you've had a 12 tick move and another tick below there to qualify it, and let's allow, because you're going market orders, you might have moved 14 ticks, and so you need to give some wriggle room. So if you're keeping a stop too tight, it's going to come back and stop you out, and that's what you got to watch. Like this one here, if you had have entered down here and only with a 5 tick stop, my concern for you entering on a market order, usually you're getting 1 to 2 tick slip, then it comes back and takes you out. That's just one thing you need to be aware of when you're scalping such a small target and a higher stop. I know what you're doing works for you, but using the T1 purely as an entry, and the reason being, of course, you've got 2 full candles and a tick below that, so that's one of the issues that you've got there. Over here, of course, we've got another nice little T9. We've come up and we've bounced on the 200. If we went and looked at the anchor chart, I could almost guarantee we were bouncing around the 89. Nice winner. You get chopped up about a bit here, and you can see here you're on the 44.30 level. You're right at that pivot. Now we come back up, and once again, if your stop was in here, you were still in that trade all the way over here, but you would have had a stop out here. That's a nice winner. Stopped on this one, then you have another nice entry for a winner. Once again, look at your anchor charts for these multiple bounces. Then scrolling right along. Now, John, I know you trade from 6 a.m. to 11:30. I've just gone a little bit beyond there. Okay, and I know you love your counter trend trades, but let's just talk about the ones that work really well that I would take. So we've come down here, you've got a T1, which is a 34 bounce. Now notice we've come down, you've bounced off for 34, come down, a little bit of pressure at the $44 level, got a 34B and break through. You've got a nice T3 on the anchor chart here. It's still a T3, but it's not a real, like, price action has really accelerated away. What improves these, once again, even though you've punched through this 43.70 level, you've still punched through just around it. Okay, you've come through and away you go again. You go up and you come down. Now traders, you've heard me, and John, okay, sorry John, I keep forgetting I'm meant to be talking to you, mate. Be very careful in ever taking the first trade against a T3 unless it's a fair way away. Like say if you're up here somewhere and you get a trade to continue with the trend, but when they're very close like this, most of these fail. Okay, so it's better off, you're just better off sitting out. Yes, you're going to still miss out on some, but you're better off giving them a miss. So here you've got a you had a T3 on the AC, but here you've got there a T9. And if you look down, traders, I've got down the comment, and a lot of these are actually T10s. Okay, and T10s are great visually on oil. If you notice, they look really good on oil. And you know, certain markets that don't appear to be as good, but on oil it works a treat. And if T10, of course, is where you've got a rising long-term stochastic, short-terms kicked down and kicked up, and away we go. If in doubt, is that how spelled down? I've misspelled that, sorry traders. Here we've got a bounce right on the 44.30. You've gone up. Now if in doubt here, I've got because that is a mini T3. Okay, you can see price has moved away, but if in doubt, wait for divergence. What will improve these trades dramatically is if you've got divergence. So we can see here, up here we had a look at that price action separate, then okay, so you can see a T1, nice T1 traveling along here. We're getting to 435 now. Come down, we've had a 200 bounce here, and that's probably about a 34 bounce now off a strong trade, and we can see here that failed very quickly. And look what it bounced on. It's bounced on the 200, the 89, and the 44.30, and you'll just learn to become very gun shy of some of these trades after you get really good divergence trades, T89s or T3s. You may have taken that one, you would have been stopped on, or if you could quick enough to stop them, you might have been all right on this one, but to gee, what is it, reverse your trade, I meant to say there. We've come down, we then have nice divergence here. When I say nice, it's not too bad here. That would have been, and let's just have a look at the anchor chart here. Let me just show you this. Okay, you can see here this is bouncing on the 289. On your anchor chart you've got a 34 bounce. Now just to mention on the anchor chart, I've had a number of people ask me about this. I'm using the anchor chart for trend direction. I'm not waiting for a close over the 8 EMA or anything like that. I am looking for reversal candles. It's a little different here. I'm using a range chart here, but if you're using tick, say if you've got a 610 or a 1597 tick candle, that's a big candle, and if you get a nice full reversal candle, that's good enough, because if you wait for a close above the 8 or over the 8, you've had a lot of movement in there, because remember your entry chart, your trading chart is 3 times lower. So just keep that in mind. So moving along here, you go up here and you've had a really nice T3. You can see it there. About price action separating right away, and over here as well. Look at that. Now just as a reminder, when you see these, you need to check the time in the bottom of a window, because this could have been a news announcement. All right, some of these, and you'll even see me mark up on my own charts that I didn't get in, or I couldn't trade it, was too fast. Sometimes you'll see these, and it's quite, you'll see a lot of these on oil where they move very quickly, and so you look back and say, wow, 10 out of 10 for all of these T3s, every one of them made money. Well, you may find that 2 of them you just couldn't get in, they just moved too quickly. So we're now up to 1040. Of course you've shorted here, you've got down here, you've got a small T9, you can see the paint bars come up here, 89 bounce. Now that was a 34B on your anchor chart, so let's have a look at that. You can see that there. So you've come down and you've bounced. Now you may look at that and think, well, that movement isn't much, but traders, it's 12, 14, 16 ticks. Well, really, you got in there, that's probably a good 12 ticks on CL, 120 bucks per contract. You've got there come down, you got a 34 bounce, you come up, you bounce off the 44.70. I haven't marked that up as a trade, John. I know you take those, and you're very good at those. You would have recognized those. There's your paint bar. You've come down here, you've got a T3, and you can see here you've got an 89 bounce on your anchor chart. You've punched through the 200, and this is where this trade I bring up regularly is when you get a double top or a double bottom on the 200. The 200 acts as really good support resistance. So just keep that in mind when you see those. Now that was only over 4 or 5 minutes, but still it's a good reference point there. You come up here, you've got nice divergence, you've got a 34.89 bounce. If you're trading with the trend, okay, you're still trading with the trend up here. You may have jumped in, John. I know you probably would have taken that one, and here this one definitely was tradable. Look at the div, you got a higher high, a bounce at the 44.70 level, and divergence. Away we go. Here you've got a T3 on both time frames, and this is another example where if you had a really tight 5 tick stop, I think you would have been stopped on this one, John. By the time you got in, lay your slippage, well, you might, oh no, actually look, if you're just scalping your 5 ticks, you would have actually been all right on that one. But but sometimes they come back and get you, as you know. Next one along, we've got a nice little T7 with the trend, which of course is a double top. I love these double tops, double bottoms with the trend. They work really well. Then as we go across lunchtime, I know we're heading here into it's around midday. We've got there, I know you don't trade after 11:30, you got there at 200 bounce. I've got down here T3 on the anchor chart, it's a sloppy, and of course we're heading into right into 12 o'clock here. So overall the T1s work really well, but so do the T2s, etc. But I know you're looking for a much more visual outlook. Now we've got some members that are doing very well trading the T25s, waiting for the trend. And how do you make sure you've got the trend? What is your high time frames telling you? Or if you're just going to use your entry chart, is your 8 above the 21? Is your 21 above the 34? Okay, so when you've got your EMAs all above each other like this, fanning apart, as Bill Williams calls it with his alligator moving averages, which are very different to what we're using, you know, the alligator's got its mouth open and it's eating. So John, I would say definitely you know, it works an absolute treat, as you can see, but you're still going to get these areas. So how do we avoid this? This is the tough one when you get into these areas. Well, if you have your stop above your pivot high or low, it's going to stop you getting stopped out of a number of these. But when you start to see your EMAs all in this crowded area like this, of course this you know, shows that we've basically got congestion. Now one of the ways we can use of course, and it works really well on range charts, is your fractal breakouts. And so if we look at these areas here, we're waiting for a close below a fractal point in the direction of our overall trend. So we can see here is our first candle that closes. So if you look at this here, you're drawing a line to the right using your closest fractal point. Here we're ignoring these because we're looking for shorts. Our anchor chart is telling us to go short, so we're drawing a line off to the right. So this one here is superseded by this one, so you draw that off. There is your entry on that candle there if you weren't game enough to take these, if you want to wait for a confirmation. And you can see here once again what improves your probability in taking these bounces is where you see you're getting a 34 bounce on your anchor chart. So I'll wrap this one up, and so John, I'll speak to you very shortly. And traders, I hope this was useful for you. So I'm going to post, well of course this is going to be posted, otherwise you won't be watching it. Now look, just one thing on the big picture, just keep an eye on this, is that basically this is a double, a triple top, and it'll be much more much smaller on an anchor chart, but I call them big pictures. So and just one more thing, as you know, look at your round numbers. So $44, $44.30, $44.50, $44.70, and of course you'd be up to 45 for doing your support lines.